Good day, ladies and gentlemen. Today I'm going to teach you a strategy that does not require daily buyers. Okay, so if you're struggling with daily buyers, you don't really understand how to go about it, this strategy is for you, because you absolutely do not need daily buyers for this particular strategy. No daily buyers. Okay, no daily buyers for this strategy. And also, if you are finding it difficult to do a proper top-down analysis, okay, whereby you have to use different time frames to analyze, this strategy is also for you, because you absolutely do not need that. Okay, there is absolutely no need for for multiple time frames. You only use one time frame for this particular strategy. One time frame is what you need. Okay, so let's get right into it. So what's the time frame you're going to be using for this strategy? You're going to be using the 15 minutes time frame. All right, you use the 15 minutes time frame. So go to any pair of your choice. It's not necessarily a GBP USD strategy. It works on almost all the pairs. Okay, so once you go to your favorite pair, what you want to do is you want to mark out the highest point and the lowest point of the Asian session. All right, so not the whole Asian session. It has to be the first 4 hours. Okay, the first 4 hours of your Asian session is the boundary you need. Okay, so right now I'm looking for the 4th hour. Okay, this is where it stopped. So I want to mark out the highest point and the lowest point of the first 4 hours of my Asian session. As you can see, the day started here. Okay, so the first 4 hours is what I want to mark out. So I think this is the lowest point. Alright, that's the lowest point of the first 4 hours of the Asian session. I'm trying to get the highest point now. This is 4 o'clock. Okay, alright, so the highest point, let me copy this line. The highest point is right here. Okay, so that's the highest point of the first 4 hours of the Asian session. So once you've marked it out like that, the next thing you want to do is you wait for a breakout. So it's more like a breakout strategy. You wait for a breakout in any direction. It could be a breakout above or a breakout below. So as you can see right here, it's a breakout above. Once you've identified the breakout and price has moved reasonably away from the upper boundary, showing you that okay, the breakout is truly in the upward direction and not a fake out, all you now need to do is go and get your Fibonacci. Get your Fibonacci tool. You fib the impulsive move with the breakout. Okay, can you see that? So this is how you're going to do. You are going to fib the move. Okay, you can see. So I'm counting all of this move as one big move. Okay, so I'm fibbing the lowest point to the point where you started seeing significant retracements. Okay, so the idea is you want to buy anywhere below the 50 line. If you're buying, you have to buy anywhere below the 50 line. Okay, you can even fine-tune your entry by going down to your 5 minutes time frame to see if there's an order block below the 50 level, or is the order block exactly at the 50 level. But ideally you should try to buy below the 50 level. While if you are selling, by the time you fib, you are trying to sell above the 50 level. Okay, so above the 50 level in a selling scenario is going to be what we call the premium region. Okay, it's going to be premium region. So you want to be selling from premium, while in a in a buying scenario below the 50 is going to be what we call discount. Okay, it's going to be what we call discount. So as you can see, price just moved a few pips below the 50 level. Probably the PDRA it was trying to tap into, the other block it was trying to tap into, or the fair value gap it was trying to tap into was just a few pips below the 50 level. So you need to go down to your 5 minutes time frame to actually fine-tune it. But I'm not going to be juggling between 15 and 5 minutes. You don't need the 5 minutes. You can still enter on these 15 minutes. Okay, so you're not trying to stress yourself on lower time frames, trying to do multiple time frame analysis. No, all you are doing, if you want to step down to 5 minutes, is just to fine-tune your entry. So you are not basically doing any serious analysis like trying to do multiple time frame analysis. No, that's not what this is about. The main strategy is executed on these 15 minutes. You only go down to 5 minutes if you want to tighten your stop loss and enter, you know, at a very, very specific point. Okay, most times it usually gets to this 60 and reverse, so you can just take your trades from the 60, but you might miss some trades if you're always focusing on taking the trades at 60. There are some that won't really get to 60, as you can see right here. It just went a little bit below 50 and then it's pushed to the upside. Okay, so that's the first example. Let me give you another example. Let me take this away. Okay, so this day happened to be a Sunday. All right, this day happened to be a Sunday, so we don't trade on Sunday. You can see the contraction. Okay, so this is just Sunday right here. This is Sunday, so we are not going to be trading on this day. We have to move to the next day. Okay, so right here, this is the next day, which is a Monday. Okay, now on this day, what's the first 4 hours? Let's get the first 4 hours for this particular day. This is 3:30. Okay, this is 4:15. Take it back. This is 3:45 to 4. So that's what I want. I'll just get my horizontal line. So this is the highest point of the first 4 hours, and this is the lowest point of the first 4 hours. So I wait for a break. Now I've seen a break above. You can see price broke above this way. Good. So that's what you're going to fib. You have to fib that impulsive move. Okay, so I'm taking all of this as one move. This is one move to me. Okay, so I'll just get my fib tool. For your take profit, you can take your profits at 0. Then if you took 2 trades, you can move stop loss to break even and wait to see if price is going to go to the extensions. Okay, so I've done my fib. All right, so let me move to see what happened. Stretch this. Okay, so you can see what happened. Price came, got below the 50 and towards 60. You can see this one lined up with 60 perfectly. Okay, it lined up with 60 perfectly. But if you also look to the left, you will see that there is an order block right here, or you can call it a supply zone, sorry, a demand zone, which price tapped into. Okay, there's a zone right there which price tapped into. All right, and this is the kind of zone you can look for in a lower time frame. Like lower time frame will help you with sniper entry. That's just the stuff. If you go to 5 minutes, it will help you with sniper entry. If not, you can just take your trades between 50 and 61. Okay, which is known as the golden zone of Fibonacci. All right, and as I said, you can take your profits when price gets to 0. Okay, if you enter 2 trades, you move SL to break even to see if it's going to get to this extension, and in this particular trade it got to both of the extensions. All right, so basically that's what I have for you today. You can do your back testing, try to understand it, check your time zone to see what the first 4 hours of your Asian session really is. Okay, you mark out the boundary, upper boundary, lower boundary. If there's a breakout, impulsive breakout in any direction, you fib the impulsive breakout, wait for a retracement at least below 50 to buy, or a retracement above 50 to sell.